Welcome to another weekly Forex forecast for the coming week, calendar week 34. We had very surprising news last week. We had an unexpected rate cut from the RBNC of 0.25%, which as a result weakened the New Zealand dollar temporarily quite a bit. We had CPI data from England and the US. Both came out lower than expected, which then leads to an expected rate cut rather sooner than later. So we will see here some conflicting price action. And we had an employment change in Australia, which was much better than expected. My bias was very clearly risk off the previous week, and this week we are kind in a undecided area. Also, the stock market started to rally again. All the indexes are recovering and are recovering in full price action. So we see that the tendency is leading more towards risk on for the coming week, and we see that here as well on the DXY on the weekly time frame. We basically filled the wick from the previous week with the almost full body weekly bearish candle into this area of interest. However, we did not finish below. So this is basically the last line in the sand. If this area holds, then we have a likelihood for price to retrace and move further up. However, at the moment, looking at the other dollar pairs for positioning, there is quite a high likelihood for price to break through and then move down to the next value area or even the low from last year in July. That might take some time, so we will see. But at the moment, as it stands for the coming week, I'm slightly moving into a bias for risk on. Moving on to Euro US dollar, we see here the opposite side. So we actually filled the wick here from the previous week. The previous week here was bearish and we closed the week bullish. We actually see a bullish momentum run, and the next higher target would be this high here. Here on the 4 hour, we see that we have a slightly more complex structure with higher highs. And at the moment, I'm looking for price to make a new high and give me some form of a small continuation pattern to fill the last leg into the next value area before I will assess if I might change the bias, my bias here for short. An alternative, if the last line in the sand holds on the DXY, so we might see that we just tap into this high and then see a strong reversal followed by a small continuation for a short. Would I trade that? Of course I would trade that. If I see on the 4 hour or on the daily, on the DXY, that we change sentiment and we are going back into more risk off and see a bullish, strong candle on the DXY, I will happily short euro. But right now, I'm more inclined to go long. Moving on to Australian dollar, US dollar. Very similar picture here. We had a complete change in momentum the last 2 weeks. We discussed that the previous week. We wicked through 2 areas of interest into a value area and followed through last week with a very strong bullish momentum candle closing on a full body. Going down to the lower time frame, the price action is not very clean. However, we have nothing here to the left in the way to this next 2 smaller. This is a very small inflection point, and here we have a smaller liquidity area into this value area here. So there is quite a lot of room to move further to the upside. Looking right now on the 1 hour for some form of a nice structured continuation pattern. If we get something like that, or even a further retrace into the previous high here before we turn around. Either way, I'm happy to take both long. So I will not change my bias until we are not closing below this area here and see some form of continuation below. That's when I would change my bias. Until then, I'm clearly biased for long. So if we get something like that, a 3-touch structure into this high, I'm also happy to take that long here. However, I don't think we will retrace the whole area. I'm looking more for a flat flag here to continuation long. Next, Euro New Zealand dollar. On the weekly time frame, we have an undecided week last week, so it's a consolidation week. But from the positioning point of view, we tapped into this previous high here and had a nice follow-through candle. Unfortunately, we ended on a wick, but the wick here was smaller than the top week and then followed by this undecided week last week. Going down straight to the 1 hour, we see that it is a slightly more complex structure, but we have a base here. We tapped into the base, and then we had the unexpected rate cut in New Zealand dollar, which moved the euro up. So, and then tapped into this small liquidity point here before then starting to roll over, and eventually is now on the way down. So overall, if we say the bias changed slightly more to risk on, means Euro New Zealand dollar should actually become weaker. At the time last week here, we had this liquidity point. I was still looking for a continuation long here for a third touch to continue long. However, we see price started to form a consolidation, a hover consolidation just on this liquidity point, and then started to break out to the downside towards the end of Friday evening. So as it stands right now, I'm looking to at least close this area here into the small area of interest we saw before, or even then for a further move to the downside. I don't think price has to come up here, so I'm looking more for a smaller consolidation here towards Monday, maybe into Tuesday for the next leg down. I might reconsider based on the DXY positioning when we arrive at this area here. Another option is if we don't get an entry in this area and price breaks out and gives us some confirmation below, I'm happy to continue the short below this area of interest. Moving on to Euro Australian dollar, we saw the week before we had this crazy bearish candle who wicked through two value areas, and we had a follow-through candle last week. So from that point of view, we are looking for a continuation short, straight to the 1 hour. We see we had some undecided price action last week, and towards the end of the week, price started to tickle down and is now just on the previous low here. So we still have the gap to fill to this area of interest. So what I'm looking at the moment is I'm looking for a continuation short, and I'm looking to get some form of a three-touch structure here to fill this range here, or then, as we said, in Euro New Zealand dollar, if we get some form of confirmation below, I'm happy to take the next short here. Pound Australian dollar, again, also very similar. You see that a lot of these pairs look similar. They are they could go either way. We had here another undecided week with sideways consolidation after this very strong bearish candle the week before, going down straight to the 1 hour. Very clearly, price was in this sideways consolidation and just moved within this range. Price during the news event did tap into this small area of interest where I was initially looking for a continuation short, and then it started to retrace, form another structure, and is now starting to sell off. Price at the moment is in a slightly higher risk area because it is within a range and it's not coming from a very clear value area. So this positioned here would be way lower risk. However, as it is at the moment with my overall bias, I'm still looking for price to at least come back down and close these two gaps here and reach this area of interest. So I'm looking for a smaller consolidation here on the 1 hour, which gives me enough room to manage a position from here to this small area of interest. And if I don't get an entry here, but a smaller consolidation below, I'm happy to take it from here to here before I change my bias. Pound Canadian dollar, we see the 2 weeks before looked like price was rolling over and we were here undecided last week. However, last week was a very strong bullish candle and retraced more or less the whole move from the previous week. We also have still a gap to fill here to the first smaller value area and still a lot of room to the upside in the bigger picture. So moving down to the 1 hour, we have not much to the left. We have here some area of interest and then closing the gap here to the higher time frame value area. That's actually what I'm looking for. We don't have a clear liquidity point here. We have a small top to retest, something like that. So right now I'm looking for a clean continuation flag, a bull flag to go long on the third touch. We saw that a few times today already. So if we get a slightly steeper pullback into this area with the 3 touch, I'm happy to go from that area. As long as we don't close below this level and see some form of some form of bear flag continuation, my bias is clearly long on pound Canadian dollar. Next is pound Swiss francs. So we see again the overall sentiment is changing. So Swiss francs is getting weaker again, which is a clear sign for risk on again. We had a very nice follow through last week, a very strong bullish candle, and are now again slightly in no man's land and have enough room to the upside, and here also a gap to fill. On the 1 hour time frame, however, we have a liquidity point here to the left, so we have to be slightly careful. We saw that price approached this liquidity point but never actually really tapped it. So if price can accumulate enough volume below this liquidity point and give me a nice 1, 2, 3 continuation pattern, there is a high likelihood that price will just move through this liquidity point without any reaction at all. So it is a bit close, but however, if I can manage the trade here with something like 25 pips stop loss, it gives me enough room to manage the trade to this liquidity point of like 2 to 1 to at least get a break even here. And if it's the trade I'm hoping for, we are in for a treat. Next is Australian dollar Swiss franc, a similar picture than we saw on pound Swiss franc. We had a nice follow-through candle, not as strong as we saw just in the previous example. However, price is clearly in a momentum run to the upside right now. So going down to the 1 hour time frame, it's a very similar picture than on pound Swiss francs. We have a liquidity point here. We have to be careful. We are on a smaller liquidity point right here, but price is going through and is forming some form of continuation pattern here. So I'm looking for something similar, ideally a 3-touch structure here to manage the trade at least to this liquidity point. And if the volume is enough, we accumulate it here, and it's the trade that is pushing price through this liquidity point, we are in for a very, very good trade. There is nothing to the left here for quite some time. Australian dollar Canadian, again, we see a change in momentum. We saw the previous week already, price lost momentum. Initially, we were clearly looking for continuation short. However, we have now 2 weeks in a row where price action is saying something different. We had this week who closed on a very, very large wick and tapped into 2 areas of interest. And we now had a very nice follow through weekly bullish candle, which closed almost full body. So we are now clearly looking for a continuation long in this momentum run. So going down to the 1 hour, we had price starting to stall on this smaller liquidity point here and finish the week above this small previous high. What I'm looking now is for a bigger consolidation for a continuation long. We have here a small liquidity point which is just slightly below this high. So if we get something like a 3-touch structure into this area, I'm happy to take this long. However, if we get a 2-touch with the small consolidation on the lower time frame, I'm also happy to take that long. But as it stands right now, I'm clearly long biased. So lastly, we have one yen pair. I decided to go for New Zealand dollar yen. All the yen pairs look similar. They still have some room to recover, so we are still in a recovery play. However, I don't really want to trade long against the yen, so I don't want to be caught up on the wrong side of the market. And we also see that a lot of the yen pairs actually approach the 50% retracement area. There is still some room for further potential long play. However, yeah, I'm not interested in the long at this time. Going down to the 4 hour, we see price is starting to squeeze. We had an initial first nice retrace reaction, an impulsive move, and since then price is just starting to squeeze, but did not reach any significant point of interest. So we have a small liquidity point here to the left, a slightly bigger one a bit higher up, and price did not tap in either of them yet. So I'm looking now for price to continue squeeze and then see some form of reaction on the first or the second liquidity point. If I then get a follow through with the small lower time frame continuation pattern, I'm happy to take that short. I will also look on the other yen pairs if we reach these more significant areas of interest and see some reaction of them. So that's it. That's my watch list for the coming week. Thanks for watching and bye bye.